Hello, today is Monday, November 13, and it's around 12:30. Let's see what do we have today on markets. The SPX still goes up, which is weird. It is exactly in this rectangle that we had a couple of days ago. It's a really nice run from the bottom. What is it? It's like 1, 2, 3, 4, 5, 6. Okay, it's like almost 9 or 10 days straight up. This is really strange, really too much. And I think VIX is, yep, it's also very cheap, 14. It's really nice. So yeah, this is lots of green days, so it would be really nice to have some kind of protection. And we did open some debit vertical puts on Qs, I think, when it was on November 8th, so like 5 days ago. Right now we are losing money on those. Yeah, not much, like minus $30-40, but still I think it would be a good idea to double down maybe tomorrow or on Wednesday, because eventually we will go down a little anyway, so it would be good to have some kind of a little bit more protection. Okay, let's see what do we have today in the bullish trade up. Right now I'm kind of neutral because I do expect some kind of drop, because it's just too many green days for now. So let's go and see first the ETFs, probably emerging markets first. Here it is, long straddle. We do have a long straddle, not interested. Then IWM, strangle straddle long call, no. And Qs, we don't have anything. We do. Debit vertical put, we already have one set, so it just doesn't make sense to do it right now. And on the SPYs also a long straddle and debit vertical put. Nothing interesting here. So let's see what we have on all the others. Credit vertical call. Well, maybe if we have something interesting. AMD, Nvidia. Well, that do make sense to have some kind of credit vertical call on Nvidia. Let's see what do we have. How does the graph looks like? Yeah, it will be risky, and they do have earnings, so probably not the best idea. What did they do last earnings? Oh, it was a really nice move up and then down. No, and we will not do this. Nvidia, Tesla. What is the Tesla? Actually, we did close the Tesla credit vertical put recently, November 8th as well, 5 days last week. So we don't have any position in Tesla, and what it is kind of weak. It doesn't go together with the market right now. So I do not have any good, I don't have any sense of direction here, so I will not touch it. Puts, credit vertical puts, SEDG. I do like them, and they just had a very interesting earnings. Do I have any position? I don't have any positions in them, so I don't even know. Their low was at 70, what was this? 63. So yes, I think we could have a position with at 63, the short put at 63, but probably not right now. I want to first wait for the market to drop a little and to see what this stock will do compared to the market. So no, this would be a nice trade, but not today. Margin to return is also pretty low, 21, 20. No, not for today. Debit vertical calls. Again, SCDG, Shopify. I think I just had a position in them. Shopify. They had really nice earnings. Interesting. Well, no, not today. Because again, I would wait for the market to drop just a little, because 10 days in a row green is a little bit too much. Okay, debit vertical puts. Walmart, Costco, Amazon. Makes sense, but I don't want to. Yeah, probably will not go with the debit vertical puts for today, because we already have them in Nasdaq, in QQQ ETF. Long iron condor. Well, maybe, but I don't see any interesting companies here. SCDG should move somewhere, because they just stand and they do nothing for like 10 days, I think, too. What do we have here? Same. Yeah, I think they're also a solar stock. They also don't move anywhere. They also just had earnings. They fell down, but nobody actually bought them. So probably not the best idea. Maybe there would be a good iron condor, probably, with puts around here, because I would expect some kind of move up, but nothing interesting too. Long iron butterfly, long straddle, and long strangle. Well, that can be interesting, because the VIX is low. We can buy something for a pretty cheap. Cisco for $4. Let's see. That's very interesting, because why is it even considered cheap? Because they do have earnings. That's interesting. They should move a little after earnings, but the position will also move, will also lose a lot. So I don't even know if it's a good idea or not. The Cisco right now is at 52, and our break-evens would be 48 and 56. Really, just that. That's actually can be a good idea, because the stock can easily move there, especially with expiration at January 19. I like it. Option premium to underline is 7%, but it's a straddle, not strangle. So yes, let's keep it in mind. Long straddle on Cisco. Interesting. Amazon is, AMD is, what is it, 116 right now? AMD. Oh, really? So they're like more than twice more expensive than Cisco right now, but the long straddle is like 4 times more expensive. Interesting. So here long straddle, yeah, 13% of the underlying, and for the Cisco is just like 7, I think. Very interesting. And we have some for CCG. It's uranium and stuff. It's also pretty expensive. Current price 43 and break even would be 50. Now that is too expensive. Cisco is interesting. And nothing that cheap here. EOG really nice for oil trades. Also not really expensive, 7.5 option premium to underlying, and probability of price going outside the break-evens is pretty high, 61, 66. That is interesting. What is their graph looks like? Yeah, they're going down. They do have dividends soon. So yes, EOG or Cisco. And long strangle. We have lots of here today. Again, EOG. Yeah, probably I would go with a EOG strangle, because this one is pretty cheap. What are the deltas? Deltas are around 0.3. And strikes 116, 131, and we are at 122. Oh, it's a little bit too high for the call. 131. Yeah, I would say that is too high. But everything should go down a little. So squares are also interesting. What is it? Oh, it's a strangle and it's 6%. It's just too expensive. But here, from here, it actually should go. It should move. So the chance is good. Right now we are at 51, and put strike is 49. Really, so close. That's actually can be a really good trade. Not cheap, but so yeah, we will need to decide whether it's a square strangle or straddle on Cisco. Let's see again Cisco. Break evens 48, 56. Expected price range. Everything is good here. Everything is good. Probability is kind of low, 57, lower than the previous one. It was like 60, over 60. Probability of profit, and this is just, it's based on Greeks. And I don't even know. Square here, according to the graph, it should go somewhere. Probably it will go down because they had a really good earnings. They jumped a lot. What do we have here with Cisco? And they're just trading around, nothing interesting, but they do have earnings soon, which will affect the price of the underlying of this option of the position. So this is not really nice. But the last time they had earnings, they jumped a lot. So, and when is the earnings? In 2 days. Well, that's a tough decision. Probably we would go with a square, because at least they don't have earnings. They had them already, so it's cheap, and they already did a huge jump, so I would expect it to go either down or continue growing, so it should be good. Let's open it so we remember the position, and that should be enough for today. I cannot find it anymore. Here it is. Well, it's pretty expensive. It's 6%, but it's until December 29. I don't really like it. And nothing regarding here. Yeah, they do have a square. Yes, this one is better. It's until January 19, and we probably will go with this trade. So for today, it's a long strangle with a 47.5 and 47.5 strikes until January 19. The current price 51, so I would expect a drop together with the market, and then I would close it probably next week. Okay, so this is it for today. See you tomorrow. Subscribe to the channel and all that stuff. Have a good day. Bye.